Market Rag for Wednesday, January 9th, 2008. Well, we finally got that rebound I was looking for. We were up over 1% across all the board on the indexes here, roughly about 150 Dow points. Here in the commodities, oil lost a lot of ground today, which was kind of interesting, and I'll show you a chart of that. Coming over to the broad market sentiment grid here, you can see a vast improvement here on this short time frame. We were down at the very bottom yesterday, and the rebound today brought us back up into some decent numbers. I don't think I'd get very excited, but at least better than what we saw yesterday. Looking at a chart of the S&P here, you can see the market made a small move down before rebounding. I got to show you guys an intraday chart of this. This is a really small time frame chart. My white line is where the market opened. As you can see, it opened, made a little rally, and then just drifted lower and lower all day. This leg right here is the leg that broke down and broke under yesterday's low. Right after that happened, look at this run. This was an amazing run for the market. This was actually 30 S&P points top to bottom. The Nasdaq's the only one that didn't close above our support area. Looking at the sectors here, again a massive improvement over yesterday's numbers. Still pretty low here in the transports and semis though, but they've been out of favor for a while. We still have an extreme low reading on telecom, energy, and industrials. The rest of these have pretty much cleaned themselves up. The most interesting of these has got to be the energy. Not so much for the shorter time frame, but definitely for this longer time frame. Looking at energy here, you'll see if we pause right here, we'll still have a higher low than our previous low. And we've already got our higher high in place. So this is still in an uptrend. Here's a chart of our consumer staples. And we are in a downtrend, but remember the longer term trend is still up. Few interesting stocks in this area right now. And probably one of the best is the utilities along with energy. We broke down through our line in the sand, but notice the quick rebound back above it. Coming over to the portfolio review, you'll notice we have a little bit more long on the table. That's from our MDAS trade we were triggered in. That's also showing up as the majority of the risk in our portfolio at this point. We still have a few short positions. I'm going to get tight with a couple of these stops just to book some of the money and move on, and we'll find another trade in the future. I'm going to go ahead and keep my market rating at a 2. I still think we have a little upside, and I'm real curious on how high they take this thing. The portfolio is still looking good. We're above our moving average, so we get to keep that 1 rating. I may throw in a few long orders, but again, I'm not going to get too excited here for a second. A lot of the better sectors are getting crushed right now, while the worst sectors are having huge rebounds. I don't like to play those downtrends. I may throw out a couple orders, but we're going to play it light during this bounce and see where it ends up taking us. You guys enjoy the rest of your evening.